Howdy everyone, it is Tuesday, August 11th. I hope everyone's having a fantastic day and what a end to the day we had today. So as you can tell, the markets are treading water as the title of the video suggests toward the end of the day. But before we dive into that, guys, I just want to bring up the fact that we have a 7-day free trial available. So if you want to join us on your pursuit of wealth, as well. You can subscribe to the channel. If you like the content, tick the little bell and you'll be notified anytime any new videos get posted. And you can check out our website at powgroup.ca or pursuitofwealth.group.com, and you can check out our membership options there. And I'm traveling, visiting family at the moment, so I don't have my normal setup, so just bear with me as I get back into the swing of things here, guys. So we'll start with SPY. So SPY, we have a bearish engulfing candle on the daily. So we broke the low of yesterday, and I actually called this out, I think it was just after 4 o'clock. Let me go into the community here. So yeah, just after 4. So 4:05 p.m., careful traders, all major sectors pulling back and nearing the low of the day together. Gold, silver, Bitcoin. So that was another red flag for me. When I woke up this morning, I saw that gold was still pulling back in a meaningful way. So if we look at the gold chart, like that's an overextended. So we didn't form really any support. We had a tiny little higher low here on gold at 1939, and we blew right past it. So as far as I can tell, there isn't anything driving the market right now in terms of news. We had the market moving news of Russia declared that they were the first in the race to a vaccine, which I highly doubt that anybody would be confident in taking said vaccine. I know I wouldn't take a vaccine if it were offered me directly from Vladimir Putin. It just wouldn't be on my priority list. And, you know, a lot of people are anti-vaccine to begin with. I think I saw a statistic that 1 out of 3 Canadians, and I'm assuming Americans are probably high up on there as well, that they're anti-vaccines. So not just COVID, but vaccines in general. So what's going to happen when we have a vaccine, or they claim that we have a vaccine that works, and 1/3 of the population isn't going to want to take the vaccine? So what's going to happen with employers? Are they going to allow their employees to return to work? Are they going to make it mandatory? What's going to happen with schools? Are your children going to be able to go to schools without the vaccine? How's that going to, you know, go over with parents and other children's parents, right? Like, how are they? It's going to create a whole other issue that it'll create some social unrest, in my opinion, because you'll have certain parents, you know, chastising the other parents for not vaccinating their children. And if you don't vaccinate your children, then it makes my children susceptible. And, you know, it's hard to find an exact solution, but I think these are all big problems. And given the fact that the stock market and gold and all those commodities have run so hard, like I said, we still got a big hurdle to get over here in the markets, and the markets are definitely treading water at the moment. So like I said, there was that vaccine update from Russia. You know, they only tested on about 100 people, and they're not even in phase 3 trials. So, you know, they say that there's still results being found. So how do you say you have a vaccine when you're still basically experimenting? It just doesn't make any sense. It looked like a overfluffed article, and I absolutely didn't care when I saw that today. And it really doesn't matter what the news is. Sometimes we'll see markets move dramatically or not at all due to a headline, and a lot of that is algorithms and bots that are in the background that pick up on that, and they create a frenzy, a selling or a buying frenzy, right? So once, you know, the truth comes out, or once, you know, people start to really wrap their head around what it is that's being headlined, then the markets tend to flatten out and find an equilibrium or find a price discovery. So as you can see, there's nothing really here on Market Watch that would indicate what the sell-off was for. So I know a lot of people are probably chasing around like, oh my God, what caused the market sell-off? But we were less than a percent away from all-time high. So let's just go back here on the monthly chart. Keep in mind too that RSI downtrend line has been our friend. If you're a bull or a bear, if you're a bull, you don't want to get complacent up here and just buy these crazy overvalued stocks and hold for, you know, years on end. You might be doing a long-term hold. Maybe your investment horizon is 10 to 20, 30 years, and you might be okay. But are you okay with losing 10, 20, 30%? Is your emotional expectations in line with, you know, the risks that you're taking on? So if you're planning to hold for 10 to 20, 30 years, then a 10, 20, 30, even 50% drop in the stock market shouldn't faze you. But you could have bought cheaper. So again, this isn't financial advice. Everybody is going to do what they want to do. But there's always, you know, risk management and the most probable scenario. In my opinion right now, the most probable scenario and least path of least resistance is down. So if we look at where we hit the RSI line, I highlighted it in yesterday's video, we poked just above, could be the most craziest dead cat bounce we've ever seen, or biggest fake out we've ever seen. But we closed above that line and we poked above it quite a bit today, when we were 1% away from the all-time high. But if you look at that, we're starting to pull back here again. And yeah, that monthly candle just dropped off in a big way. But if we look at where we were today to the all-time high, 0.5% in terms of distance to the all-time high. So that is basically an all-time high in my books. Do we double top there? A lot of people were looking at the gap to fill on the daily chart, which was right here. So if we look here, it was 332.58. We filled that gap. And then what stocks tend to do is they tend to overshoot, right? So we hit that target that hundreds and hundreds of thousands of people were looking at, if not millions, and then we overshot. And then no one ever thought we were going to go to all-time highs again. So we got within less than 1%. Maybe that's the top. Maybe that marks the, maybe we overshot the gap territory target and we overshot to a double top to the all-time high. Now we pull back. I mean, that daily candle, that's a bearish engulfing candle. And if we look over here to SPXS, that's a tongue twister. I say that 5 times fast. So if we look at that one, it's the opposite, right? So it's a bullish engulfing candle stick on the daily. So I wouldn't, and we're getting close to this downward slope support level here in this channel. So I wouldn't be surprised if we saw a bounce. Another thing to look at is the dollar. So the dollar had a bit of a double bottom there around the 92.50 level. And we've got some previous price history in that level as well. So forming a little base of support there, starting to bounce on the daily. We've got a bearish reversal, bullish reversal candle here forming on the daily as well. Let's look into the hourly chart. Hourly, did we change the trend? No, we did not. So bulls have tons of space for an hourly high or low. Zooming into the 15-minute, lots of support here in the 15-minute. So yeah, we're definitely keeping an eye on the rotation, and bonds and yields are starting to trend. And that's another thing too, is when we see bonds tend to go so if they're inverse correlating to the overall market, that's a red flag for me. And usually we see the bonds follow the overall market, but bonds were lacking, and now bonds are going up and equities are going down. And another thing is that the dollar is so beat up that people are going to start rotating. In my opinion, they'll start to rotate back into the dollar, and that's going to hurt equities and stocks in the short term, in my opinion. So if we look at QQQ, the tech sector closed near the low of the day. So again, when we see all sectors going the same direction simultaneously, we put on our red flag, hats, and we start to look at the momentum in the direction that it's going. So in this case, when I posted in the group here today in the community, so that's the benefit of trading in a community. You can join us for a 1-week free trial or subscribe for $4.99 a month. You'll see here, I let everybody know in the channel, I said careful traders, all sectors pulling back. Bitcoin, SPY, which is the ETF that tracks the S&P 500, QQQ, which is the ETF that tracks the technology sector, the ETF for healthcare, financial, energy, all of them, USOIL, they all started to pull back at the same time. So they have to pull back together to see any meaningful consolidation. Gold, silver, also down 5 and 7% respectively. So again, and I said that I expect hard assets to hold up better than, and hard assets being gold, silver, metals, Bitcoin, that type of thing. Because I think this time they'll act more as an inflation hedge. And something we have to keep in mind as well, guys, is the fact that the monetary policy could change. What do people do in, what does all this money printing do? It creates inflation. It's an inflation risk. And what does the Federal Reserve tend to do in times of inflation? Well, one common way to combat inflation would be to raise interest rates. So as we know, we're at ZIRP, which is 0% interest rates. So you can get, you know, incredible amounts of money for next to nothing, if not nothing in some places. In Australia, it's actually negative. You actually get money back for the housing market. So when you look at that, guys, the monetary policy could change, and you have to be ready for that wrench that could potentially be thrown at us. There's a lot of bear catalysts. There's talks of you know, schools again and children carrying the virus more efficiently than once thought. So we really need to tread water lightly. Like we need to be you know, on the edge of our seats and not get complacent. A lot of people tend to get complacent, and that's just not what you want to do at this time, this point in time. So we'll look at the fear and greed index right now in the stock markets. Yeah, it was at 75 today, so I expected that to drop a little bit. But where do we go from here? So QQQ, obviously. So going back to what I said earlier, as we wrap up, SPY. So once I started to notice, you know, we basically chopped around all day and we V-shaped, which is nothing new from the dump in the morning. But what got my attention was when I noticed that XLE and XLF started to consolidate towards the end of the day, right around here. And that was just about a couple minutes after I posted that in the group. So if you look here, it was holding us up all day. We had a gap up. It was holding SPY up in the face of QQQ weakness. So QQQ was weak to start the pre-market and the morning, and SPY gapped up. Why did that happen? Because of these other sectors, like the energy sector and the financial sector, seeing a gap up as well. So we started to see that rotation into other sectors. So once I noticed that XLE, the energy, and XLF, the financial sector, started to pull back quite significantly simultaneously, that had me looking at the healthcare sector. Healthcare sector was nearing the low of the day. XBI saw a huge drop near the low of the day. Gold was at the low of the day. Silver, VIX saw a spike. So the volatility index, which shows that people are buying insurance and hedging. USOIL was trending down. SPY was trending down. The semiconductor ETF was trending down. Like, you're getting the picture here, right? And the common theme, everything was trending down. IWM. And look what happened to SPY into the end of the day. From basically the high of the day, it dropped 2%. I mean, that's taking us back. It's making me remember the March lows days when we hit those circuit breakers and we dropped 5 to 10, 7% in no time. So again, guys, not a strong close at all. I would definitely be on the lookout for a potential test of. So we're still healthy. This is still. I mean, the fact that we pulled back so rapidly and quickly that to end the day and all sectors moving simultaneously in the same direction towards the downside, that has me a little skeptical that this may be different. This could be our double top basically of the all-time high, but we're still in a daily uptrend. So if we lose 319, then we're in we've lost the uptrend, right? But we're going to have to form a lower high and a lower low to confirm a downtrend. So we've got a long ways to go before that could happen. But guys, as you can see, we could go down here and we could form a lower high and then a lower low and change the daily trend bearish. But right now, we're just looking for a daily higher low, and anything above 319 will give us that higher low. How do we know when the higher low has been set? We look for an hourly trend change. So we had an hourly lower high and lower low. That means we have a downtrend on the hourly chart. So now we'll look for an hourly trend change on the on this hourly chart to be confident that our daily higher low is set. So we also have EMA support 12 on the watch here as well, which we could see some bounce. I particularly would expect a bounce. I'm watching the 227 level. So we have prior resistance, which could become support. We also have this uptrend, long-term uptrend support line to be looking at. But honestly, the weekly chart, we don't have any support on the weekly until the 296 level. And on the monthly chart, we haven't had any higher lows. So this is what has me skeptical and a bit cautious as well. We don't have any support on the monthly, none whatsoever. So this could, if we break daily and weekly supports, this could get very ugly. And I can't stress enough, you know, how I would recommend that you make a game plan and just, you know, don't get complacent and make sure that you know what you're getting into if you're buying up at these levels, especially if you're long. I'm personally short. I've been accumulating a short position now in SPY for quite some time. I shorted the tech sector very briefly, but honestly, I don't have the cojones to be shorting the tech sector because, as we know, the companies are financially and economically sound. Even in the times of a pandemic, they continue to thrive. So they're basically untouchable, unkillable. So I'm putting my eggs in the SPY short basket. And this is a position that I'm accumulating that I plan to hold for the long term. And when we see a huge bounce like this off the lows, right? What are the odds that we're going to continue to a higher high? I mean, it's possible, but not plausible. Like, it's not something that I would be counting on. It would be the least likely scenario in my opinion. So what happens when we see a huge bounce off the lows? We tend to see an equilibrium. So rather than a lower high and lower low and a trend change, what we could expect to see is a double top, and then we form a higher low, a lower high, higher low, lower high into the next few months, into the next year, and potentially enter a prolonged bear market. That's what I'm anticipating. Again, the charts will tell us whether or not our thesis is correct, but as of right now, we're still bullish. We're still holding this uptrend line on the monthly. We haven't closed a single candle below it. So in my opinion, as long as we hold the low of this candle, which is 327, we're still bullish. If we roll over and we close above this, so as you can see, we're parabolic. Once you have such an acute angle here, what goes up tends to come down twice as fast. I made a quote yesterday. It was just a comical quote, but it was what must go up must go down, sideways, or even more up. So we don't know which way it's going to go, but time will tell us. And the more we check in each day, we'll have, each will have that probability in our favor, and we'll know with some additional clues as time goes on. The more we check in and the more data we get, we'll have a better idea of where we're going in the future. So again, guys, it's Rod with POW Group. Thanks so much for joining us on the Pursuit of Wealth here today. Hope you love the video and enjoy the content. Tick the little bell, subscribe to the channel so that you get notified each time I post an update, and check out powgroup.ca for our memberships and 7-day free trial. Have yourself a great evening, and we'll talk to you guys again real soon.